Hello, I'm Tag,
And this is Bob.
and you're listening to Bob and Tag Talk. Before we start the show, I'd like to point out that the topics discussed on Bob and Tag Talk are for informational purposes only. So please don't take this as investment advice. We urge you to do your own research before making any investment. All right. So in today's episode, we are continuing to talk about Mirae Asset. So right now we're going to talk about a specific ETF and mutual fund called AI and EV.
AI tech, and then we have one more called EV.
Oh, so it's like three different subsets.
Yeah, it has a lot of different subsets, but all of them are technologies, but mainly AI, electric vehicles,
Okay.
and then automation and things like that.
All right. Okay.
So we'll start with Mirae Assets, one of the fund of funds, which is called, the Mirae Asset Global X Artificial Intelligence and Technology ETF.
Okay.
So this is basically, there is a separate mutual fund house called Global X, which is available in the international market. So they basically choose and pick stocks which they think are primarily exposed to AI and tech. So when we actually compare with most of the technology stocks, most of the companies will be in common.
Okay.
But there are some specific stocks which are small companies which are chosen as part of this, which will have a lot more exposure to AI and technology, different kind of technology.
Okay. Okay.
Not like the usual dominant technology companies. So if you go to the dominant technology companies, just like in S&P 500 and in NASDAQ, we have Meta, Nvidia, Tesla, Microsoft, Apple, Cisco, Intel, Adobe, Amazon, and so on.
All right.
And we have other things like Oracle, Accenture, Google, so many other things are very common companies. And this AI and tech also has these companies as well.
Okay. Okay.
And the thing is, again, this is since it's an ETF and it has a lot of companies actually. But what we are gonna just check is like these small companies and what exactly are the interesting companies that are there.
Okay.
So one of them is So this particular fund has one interesting sector of, or it's like not a sector, it's like countries, companies in those particular countries like China and Japan.
Okay.
So there are a lot of AI and technology companies in China and Japan which are part of these indexes.
Oh,
So this is one thing that differentiates it from any other technology ETFs. So for example, there are also like small startups and some kind of small networking companies. So one of the companies that I really like is called Twilio.
Okay.
Twilio is like, again, it's a competitor to kind of some networking companies where they also into messaging platforms and so on. So that is a really interesting company. There's also some company called UiPath.
Mm-hmm.
There's also something really different. And there are a lot of hardware companies as well, like Teradata, Toshiba, and then companies like hard disk. Generally, what we know, we think that there are hard disk companies or dedicated semiconductor or product companies, but they also do a lot of software and AI things as well, which we are really not aware of.
Okay.
So those are some companies, and there are some interesting small companies like Okta Inc. Okta Inc. is mainly related to authentication and authorization softwares.
Oh, all right. Okay.
And then Splunk is one kind of company. And then HP, they're all traditional companies in this as well. But there are some important Chinese companies are there as part of this, is Baidu and then Alibaba.
Okay.
So both of these companies are one of the top companies in China. So one of the recent events are like Alibaba stock has been down for the past 1 to 1.5 years. A lot of these very specific investors, like value investors, have found Alibaba to be like one company where they think there could be a lot of value and that could happen in the next 1 or 2 years. So there are a lot of government-related controversies and Chinese government-related controversies and some kind of restrictions that have been placed on the company, which may be lifted in the next 1 year.
Okay.
So that is one that could really, give us an advantage in the next 1 or 2 years.
Mm-hmm.
And there are also traditional Korean companies like Samsung, and then we have some other Japanese companies which you already mentioned, and then Taiwan companies are already there. So mostly AI and tech apart from US and Europe. So if you want to look into those kind of things, so this really covers all this kind of. There are a lot of market share, market cap that is part of this.
Right. I also see Shopify, eBay. I saw Wix and a couple
these
of
are
other
all
ones.
consumer
companies. Yeah.
Shopify, I think, is a Canadian company, I guess.
Okay.
So a lot of different countries are also involved in that.
Yeah. Very niche sort of
Yes. And
holdings.
when we talk about niche, that's always we have to talk about the risk as well.
Okay.
So this is high risk, and then the distribution is like very volatile. When we say volatile, the prices could shoot up sometime, suddenly drop down sometime. We have to be prepared for all these kind of things. And when we see the expense ratio I thought was very reasonable. For a mutual fund, the expense ratio, I think the direct one and the regular plan is that mutual fund, direct one is only 0.11%. One of the lowest expense ratios you can have. So in that way, I thought it was very good compared to all the traditional and popular ETFs that are there in the market.
So I suppose, if anybody is looking for extremely focused holdings in terms of Asian hardware, software stuff,
and looking into technology-wise, which is futuristic technology, which can really boom in the next 20 to 30 years.
Right. Yeah. Then this would be something that they could be interested.
One of the recent developments in AI has been the use of ChatGPT.
Right.
So ChatGPT is kind of a software model which has been really stable now, and it has come to the market with kind of very unique kind of USP, and they are collaborating with different companies like Microsoft, and then different other companies they have collaborations with as well. They're trying to combine ChatGPT with other softwares. Now, Google also will try to compete with them. And since their Google search, there's a possibility that it might be overshadowed by these kind of AI-related answering kind of technologies. So a lot of traditional networking companies, traditional communication companies also experimenting with AI. They'll use the ChatGPT models, and then they can also use it. And even we as individual users also can get a subscription plan and use ChatGPT for our daily day-to-day lives as well.
From what I saw, when because I've been using ChatGPT regularly, trying to train the AI, trying different I don't know, experimenting with it. So I also see that they are coming up with some sort of a subscription-based service. So it's happening in the blink of an eye, honestly.
It's happening much faster than people expect.
Right.
Actually.
Yeah.
No one expected suddenly just to come out and say in 3 months, so many users. There was one interesting news article, probably in YouTube, where they mentioned that in Facebook, if you see the number of users in Facebook, it took 8 years for them to probably have some millions of users.
Yeah.
For ChatGPT, it took them only 6 months or less than a year.
Yeah.
So the kind of popularity and then something unique, something new, that thing is there, and a lot of people have started to use it. And as more people use it, it will become more smarter. It will become more efficient at some things, and then it will try to solve different kind of problems. There are also some healthcare companies which are trying to use AI to kind of develop new medicines and things like that. So probably the advantage of choosing these kind of mutual funds is if they find some new company, if they come to know of some new startup, and if they're going to use AI in some new different ways, different fields. Like let's just an example. As of now, we don't think shipping and logistics and all will use AI. Maybe it is possible 10 years from now it will be used. So these mutual fund companies who are specializing in these kind of unique niche sectors, they'll keep on the lookout for new smaller companies who have an advantage, and then they'll go and invest there. So you don't have to go and look for it, and the mutual fund company or the ETF will go there and look for it.
And that's probably why this area will be a little bit more volatile than other mutual funds, I suppose.
There'll be a lot of churn and things like that. So the companies will keep changing. There are some other ETFs also which are related, like the companies list keep changing drastically. So this week it might be different, next month it may be different. So, but the top 10 or top 20 should be the same, but ideally small companies will keep coming in. That is actually advantage in the long run, but obviously in the short term there will be some volatility.
Right, yeah. So just I think the key here is to just make sure you check the fact sheets every now and then, so to make sure if these are the companies that you want to be investing in and all of that.
Yes. The advantage is you can use it from your own mutual fund account or a demat account, and you can go and invest in these kind of funds.
Right. Now let's move on to another major ETF, Global Electrics and Autonomous Vehicles ETF.
Yes. Yeah. So again, this is again an ETF provided by Mirae Asset, and this is again a global mutual fund provided by Global X. So this particular ETF is like, again, this particular kind of fund of funds. So what we mean by fund of funds is this is a particular fund but they again invest in 2 or 3 different ETFs. So the interesting thing here is there is one particular ETF called Global X Autonomous Electrical Vehicles, where they invest 80% of that particular holdings or money. There are 2 other ETFs which are lithium and battery technologies. That's a separate ETF, which is specific to companies who are mining lithium or processing lithium, and mainly for developing better battery, or research in better battery, or developing manufacturing batteries. That is one section. The other one is Chinese companies in electric vehicle and battery. So there are 2 different things. That's a very good reason why they have separated into 2 different ETFs. We will also discuss that. So starting with autonomous electric vehicles, everyone is familiar with it these days. So Tesla is one of the leading companies there. So, and then semiconductor companies, and even there are also rumors that Apple will also try to develop their own this particular business. And Google also have their own kind of. They have some companies that are related to autonomous vehicles as well. This will be the larger holdings as part of the technology sector in autonomous vehicles and electric vehicles as well. But there are other traditional players as well, like Toyota, and then there are some companies, Japanese companies, who are very, very keen on this, like Hitachi. And then there are semiconductor companies, and then traditional motor companies like General Motors, Ford Motors, Honda, and then Kia in Korea. Kia is, I think, owned by Hyundai as well, subsidiary of Hyundai. Then we have LG, Volkswagen, then Panasonic, Nissan. So a lot of automobile companies. And then there are some new companies, new automobile companies, startups like Neo, and then some kind of Luminar Tech and so on. And they are also there. There are a lot of lithium mineral-based companies. This is very interesting part, is that you have the traditional automobile companies, you have the industrial companies as well, you have mining companies, and then you have mineral processing companies and so on. It's a very different kind of a mix here. And again, there is a lot of volatility here, lot of there's also risk. The risk comes with like a lot of new companies which don't have a kind of a popular product, but they are still trying to develop a product or develop a solution for EVs and things like that. So Nikola is like a very controversial company. They don't have a product. They just have a a vision. They just have some kind of a basic plan or an idea, and then they have proven it by a kind of a sample of a model and things like that. But they don't have large scale manufacturing and all.
They're still in the prototype stages.
Yeah, they're still in the prototype stages. So there is risk in that way.
Okay. So, but because a lot of it is focused on, a lot of stable automobile manufacturers like Ford, Hyundai, whatever it is, would it be fair to say that this will not fluctuate as much, or is it still, a lot of risk involved?
There is still a lot of the fluctuations will always happen, because for Toyota and all that, it's all more based on R&D. So as and when the technology changes, new technology comes in, more efficiency, you have to spend a lot and then to research and do something effectively. And some of the recent news, if you have seen, like in India, they did, there's a governmental organization that looks into mineral reserves. They found out that we have, at least in the country, in the northern part of the country, we have significant lithium reserves which could be extracted. So all the countries will now go and try to, find out if they have lithium reserves. And these are really important for us to move into an electrical vehicle kind of a stage in the next 20-30 years, to reduce the dependency on oil, reduce greenhouse emission gases and so on. So all the companies will spend more on it, and all the countries will also spend more on it. They'll give significant benefits and so on. And everyone, there is a lot of profitability that we could see in the next 20 to 30 years. But in the short term, it is very risky. That's something that we need to recognize.
Oh, okay, fine. So when you mean short term, how much would you say?
Well, in the short term, at least for the next 5 years, in the autonomous vehicles, there is a lot of churn. There could be new companies coming in. Traditional players might, combine or merge their companies and so on. And as we mentioned, this particular Mirae Asset is a combination of 3 different funds. And the other 2 funds that we're going to talk about is the lithium and battery tech, and then China electric vehicle. So they invest about 10% in each of these particular funds. This whole fund will split 80, 10, and 10. So why did they do it this way? It's just assumption is that Chinese companies have different regulatory environments. So they have a huge lithium reserves, as a company, but there are different governmental regulations. They are not an open market as in US or Europe or any other countries. So, and the government regulations will be stricter. What kind of investors go and invest inside China has a different risk profile also. The Chinese government can shut down some companies if they think it is not beneficial to their country and so on. So there is a lot of risk involved. So that's why a lot of mutual fund houses are very careful in investing in China. So they separate the risk environments in it. So that's why they invest separately in Chinese EV and battery as a separate ETF, and then lithium and battery technologies as a separate ETF.
Okay.
So this will have different companies. Some may be Chinese, some may be Korean, some may be different Asian companies, or some may be European and US companies. There are some companies in South America as well. So we have different mix of companies, but their theme is this a totally thematic fund on battery technologies and electric vehicles. That's right.
Okay.
So again, the largest holdings are primarily Japanese companies and Tesla, and then a lot of companies that develop consumer electronics as well. But again, Chinese companies are mostly the ones which are huge in this particular, dominating this particular ETF.
Okay.
So the largest one is BYD. BYD is one of the largest competitors to Tesla globally. So one of the really stable companies in China as well. So they don't have any kind of problems with the Chinese government. So it's considered very stable, and that's why most of the mutual fund houses investors pick that particular company. And there are other companies like very interestingly, there is a company called Japanese Steel Works. So steel industries, mining industries, processing industries of metals, they're also trying to get involved in these kind of processing of the extracting lithium or developing these batteries and so on. So there'll be a lot of lithium battery and mining companies also part of this.
So with respect to these ETFs that are largely Chinese companies based, what do you think is one of the major risks?
Yeah, like we mentioned, it is the governmental policies are risk. Okay. If they say that only this amount of lithium can be exported, or this much only more than companies which bring too much profit or something, they can try to
regulate
put
them.
More taxes and so on.
Okay.
But as a global industry, there is a lot of demand for lithium as a mineral, because that is the only stable battery metal resource that we have as of now. But there are a lot of companies that are researching for other metals as well. Is there any substitute for lithium and so on? And this is a constantly changing space. So in another 5 years' time, probably they will say that there's a different metal which can be more efficiently used, and lithium might go away suddenly. So those kind of risks we have to be aware of as well. And then there is this kind of global trade wars that happen. For example, there was the trade war a couple of years ago, 3 years ago, between US and China, between how much of export and import. Those kind of trade wars also could be affecting this kind of thing. And Australian companies are also have a lot of kind of reserves in minerals and mining companies based on that. So you have this geographical difference, but dominance, which country will dominate this kind of market? That is something will be interesting to see, and it will keep changing. Those are the risks that we have to see. And then coming to the EV and battery specific to China, so they are primarily, again, BYD is the dominant one. There are specific lithium and minerals and material companies which are part of that. Which, as end investors, we don't have to be really bothered about it. We have to be really reliant on these mutual funds that they pick the right companies. So that's a risk that we'll have to take.
All right. What about expense ratio wise?
Again, expense ratio wise, investing in Mirae Asset again is very low. 0.11, 0.17, that's perfectly fine for a direct investor. So in that way, at least we don't see any lot of risk.
All right, so that's been the summary, a detailed summary about Mirae Asset, AI and EV. So we saw how there is a lot of Chinese involvement in this, and then semiconductor technology and how it's concentrated. It is slightly high risk, but it depends on a lot of incoming changes in the market, what could be the different challenges, if there are any new resources, how they're going to handle it. So that's been about Mirae Asset, and I think that's a good spot to end it there today. Hey, thanks for listening to Bob and Tag Talk. Please consider following us on our Instagram and Facebook pages. We put out weekly summaries of the topics discussed on the podcast. And if you found this episode informative, please like, share, and subscribe.